Warrior training, providing the power to become.
Alright, technical analysis on the Euro Dollar Japanese Yen, date 27 February 2008, time 02:45 Eastern Standard Time, 01:45 Central Standard Time. Let's take a look at our 4-hour chart. Price has been rising above our 1-2 of our inner trio, pulled back, caught support on our 5 of the outer trio, double support from the 4 and the 5 of the outer trio, and then continuing to rise with good angle and separation between the 1 and 2 of our inner trio. Lower indicators appear to be lining up for a possible sell, but because this is a 1-hour chart, we'd have to have some nice confluence between our candles and all the indicators on the lower time frame charts to line up with this 4-hour chart to enter a sell, keeping in mind that our 1 and 2 of the inner trio are still spread out, indicating you are still in a bullish market. So we would look for some consolidation sideways and then for the sell signals across the board. 1-hour chart, we had this nice steep rise to 161.38 before the pullback, which of course has caught support for the 1, 2, 3 third time at our 1, 2 of the inner trio. However, all of our lower indicators are appearing to be in a decline, except for the second of the lower indicator, which is actually in a buy posture, which we would expect to be in confluence with the rise off the 1, 2 inner trio. Now, a nice sell signal would be a nice shooting star here for a lower high, lower high. Then that would be a 1, 2 failure, and all the other indicators are lined up for that sell. So then, if that would be the case, sending price into trend. 15-minute chart, getting really close to the action. 15-minute chart, turns out that decline was a nice steady trend, bringing it below our inner trio, catching support on the 1 of the outer trio, then rising again. The first of our lower indicators is actually lined up for a nice sell. So if we get the right candle formation here, breaking the pivot of this high, which is at looks like about 106.73, would be the right area. If we get a pivot, then possibly an evening star. Everything else is lined up for the momentum to carry. Let's do a Fibonacci and see where that puts us. From the price high of 161.38 to the pogos on the 1 of the outer trio at 106.40. Drag it out to the future or to current. So that's a 161.8 retracement, which is a classic pullback for continuation. We do have a decent shot group. Let's take the crosshairs off. Actually, let's do a projection first. On the projection, starting at the 106.40, bottom of the pogos, to where the 161.8 actually hit, for a projection of 161.8, which is, check it out, in line with the third of our outer trio. So we're gonna mark that puppy with the smiley face. Future time out here. So look at that, psychological 160 level. So let's take the fibs off so we can have a clear face chart, clear chart face. Now here's what we like. We like that we have a tight shot group here. Looks like about a 15 pip range. We love it when that occurs because that shows a nice agreement in the market itself overall from different perspectives. And of course the outer trios 2 and 3 are sitting below the inner trio, so of course those will be anticipated support levels. So using the fibs that we drew, price would have to bust through the support of the pogos here to meet the projection of the fib 1618. Stop would be here. But the idea is to be trading with the intraday trend, which is this fall here. This to be the retracement, and then of course passing the pivot of this candle head would be a continuation to our first line of support at the pogos, and then if breaking there to our Fibonacci projection. Preparing to enter a sell on the Euro Yen. Entering the sell. Entered in 106.80. Placing our stop. I can't even see it. Placing our stop at 10. Prices at break even, 1 pip profit, 2 pips profit, 160.74, 3 pips profit, 160.73, which also broke the pivot candle head, which would have been our more aggressive entry. So this actually is another entry point, so we'll stay in. That's 5 pips profit at 160.71. And now our lower indicators are really lining up on our 15-minute. Let's take a look at our 1 hour and see if we have a confirmation. Looking for that confirmation cross on the second of our lower indicators. The first of our lower indicators seems to be lining up fairly well. If price happens to go dramatically to 160.54, that would be a very good sign that this is a longer term trade. Of course, that would have to be dramatic. See if we have any near term support approaching. Preparing to close, but not closing yet. Because this W that it broke here, here, the rise it broke here. When price breaks back to the base of the W, that's some serious there. Right. Which is why you guide it through step by step. So you say first entry is here. That's my more conservative entry point for my stoppage from. Right. But I know if price gets to this point, it's going to give me 10 pips or so. Okay. But my stoppage is too far away. So the risk is in line, but you got to reduce your lot size. Right. Right. But now if I trade it up here with a tighter stop, I can trade a more aggressive lot size. Okay. Right. And so look at it go. And then if price continues to, it's negotiating at 5 minutes, man. That's what it does. Okay. But then if price continues to break every point, then you just know where you are because you did your analysis from it. Warrior Pippin, ATX style. That's how we do it. Ebony and ivory. Perfect harmony. Get you some, baby. Right to the top of our smiley face and our purple line as predicted. Out. Cha-ching. More information, visit us at www.pipwarrior.com. Email us at info@pipwarriortrainer.com or phone area code 512-314-5668 and join our Pip Warrior network to live the life of your dreams. Pip Warrior Training, providing the power to become.